Everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets, featuring daily technical analysis videos of the S&P 500 index. It is after the close on February 21st, 2012. And before we take a look at the chart, I just need to remind you once again that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. Look, I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional, just a guy that draws lines on charts. So look, here we go. We a couple days ago had started looking at an upper resistance line. And what color shall I make this? I want to make this stand out a little bit. Let's make it, not because it means good thing or bad thing, let's just make it green. So there we got this new green pattern here. It's not totally new, but we started looking at it a few days ago after we had made this top and showed that these tops right here, especially in the week, late in the week of the first of February. So now look, that is exactly where the markets found resistance today. In other words, if we go all the way back to the January 26th and draw a line starting there across these last three little peaks here in on February, what was it, 7th, 8th, and 9th. That's when we entered this little consolidation area, broke out of that, and now hit that line again, and that turned the markets back. Now here's the deal. We actually have two lines that are targets. We've got this yellow line that I have highlighted right here that is the target from the inverse head and shoulders. That line is somewhere between 1378 and 1330. And then we've got this little consolidation pattern and its little line, and it's not a huge target here, but that says we should be getting up to about 1370. And I don't think today didn't look like it really satisfied that expectation. Got very close. Near those highs right to just before the middle of the day, but it did not meet that line. So I'm going to make this line a pale yellow. Okay, this is one target, and if you want to know exactly where that target is located, it's located, well, 1370, pretty darn close, 1369 and change, call it 1370. And then you got this other line up here that is the target from the inverse head and shoulders pattern. There it is. That says 1378 to 1380. And guys, it looks to me like this market is kind of giving us a heads up here. And I think the heads up is that both of these targets are well within range of what this market can do. But I think the market is also telling us that with this loss of volatility, it's starting to look like an ascending wedge coming off, actually forming for the entire month of February. And that wedge has kind of shows us that there's an implied upper limit to this move of right around 1400. And wouldn't that be just kind of typical? Because you know how the markets have this penchant for reaching psychological areas and then not able to get over them. And maybe this is a forecast that tells us that while we can expect 1370 and 1378, there's this implication here for the entire month of February that about 1,400 is all this market can do for right now, without coming back down and consolidating or coming back down for some kind of corrective move. And that's just the way it looks to me. If that were the case, and I'm not saying that when you have an ascending wedge like this that you look at the apex, you don't call that a target. Okay? You call what I tend to do is I tend to say, well, that's an upper limit. At least for the time being, this area right here, the market likely would not be able to get over that line without first breaking this ascending wedge and then coming back down to weed out some sellers and to pick up some new buyers. Now what's interesting is we also have an ascending blue line and an ascending green line. And those all sort of line up right now. If we look at where trading would be if we had a really strong downward move, then we're looking in the 1320s. Okay, and that would be also a back test on this blue line that we have examined. That blue line again is drawn over the 2007 S&P all-time high top, and then the top in 2011. We are definitely, undoubtedly, technically significantly over that line, and have been for how many days now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, something like that. So, I think this rising line is technically significant now, and that should provide some support. And I also want to remind you that when you get a rising wedge pattern, the tendency is for when they break down to want to come down to the levels of where they got started. But I think this line would probably stop it. So that's kind of what I'm seeing right now in the S&P. I'm seeing that the market wants to go higher, wants to meet these targets, but because of the shape that we've traded in for the entire month of February, and that being something so far with 1, 2, 3, 4, 5 touches, 3 on the top and 2 on the bottom, this looks like a rising wedge, and this looks like a setup for at least a short-term corrective move when this line breaks. So look, that's it for today. Just thought I'd share this. Obviously, the S&P has been just really almost going nowhere for the past 2 weeks. I would like to I'd like to apologize for that. It makes these videos less interesting, and it also makes maybe their importance seem less so. But I promise you, at some point in the very near future, there will be a swift corrective move. I don't think it'll be huge, but there will be some corrective move once this lower line is broken here, and I suspect it will want to come down and test this line, and if this line doesn't hold it, then it wants to come down to those mid 1320s. So look, that's my story, and I'm sticking to it for February 21st, 2012. Thanks for taking time out of your day to watch this, and thank you for being a subscriber. I do appreciate it. Take care.